Iraqi Dinar Today latest news. Welcome back to our viewers, where today's comprehensive report delves into a confluence of global and local financial developments that demand the attention of every serious currency holder. What we are observing in the current climate transcends mere day fluctuations. It suggests a potential structural shift in the emerging market currency landscape. The volume of significant chatter, coupled with observable changes in banking behavior across continents, indicates that the Iraqi Dinar and Vietnamese Dong markets are entering a distinctive and perhaps unprecedented phase. This moment is being characterized by financial experts not as a period of simple market noise, but as a critical prepositioning window for regulatory and policy adjustments. We will meticulously break down the movement behind the scenes, discussing the increased scrutiny on exchange activity, analyzing the shifting dynamics of both the dinar and dong markets, emphasizing why strategic timing is paramount, and detailing the preparatory steps that one should consider taking now before any official announcements or opportunities materialize. Your next deliberate and informed move is of immense importance, so we urge you to silence all distractions, focus intently on this analysis, and stay with us through this complete, detailed breakdown. For those who have diligently followed the narrative of the Iraqi dinar, an unmistakable pattern of anomalous behavior has begun to surface within the market ecosystem. The sheer volume of internal discussion originating from currency holders, individuals with prior banking ties, and various private investment forums has spiked dramatically, reaching a level of intensity far exceeding any recorded over the past 12 months. Reports have become increasingly frequent concerning obstacles in placing foreign currency orders, the sudden imposition of stringent new identity verification protocols, temporary branch closures citing system updates, and the unexpected halting of sales for certain foreign notes that were once readily available. These are not isolated or random operational occurrences. Historically, such tightening controls often precede significant regulatory shifts or adjustments in currency exchange mechanisms. Given that the dinar remains under strict central control, any abnormal pattern of market friction is often interpreted as an indicator that a planned systemic shift is being quietly prepared behind the curtains of the financial world. Across major financial hubs, particularly throughout the United States, foreign currency desks at numerous institutions have reportedly adopted a conspicuous quiet zone policy, where staff are either unable or unwilling to offer any specific commentary whatsoever on the Iraqi dinar. This silence, rather than calming the situation, naturally serves only to amplify the existing speculation among observers. Whether the culmination of these internal maneuvers results in a measurable public rate change, the introduction of a new government policy, or simply another step toward monetary stabilization by Iraq's central authorities, the overall trajectory of the market is undeniably divergent from its behavior just 6 months prior. Those who maintain a disciplined focus on the subtle, often overlooked indicators are effectively positioning themselves in anticipation of a much larger internal financial development. Such moments require careful observation of the coordinated behavior, rather than relying on isolated anecdotal reports. Shifting our focus now to the Vietnamese Dong, this currency has steadily accumulated a growing body of attention from global financial circles, positioning it as a significant subject for contemporary analysis. A favorable combination of robust economic fluctuations, a notable surge in export activity, and the negotiation of beneficial regional trade agreements have together propelled Vietnam to the forefront as one of the fastest growing economies in the entire Southeast Asian region. Concurrently, the nation's commitment to internal reforms and the vigorous modernization of its digital payment infrastructure leads many financial analysts to suggest that the Dong is being fundamentally positioned for a trajectory of gradual, sustained strengthening, contrasting with dramatic, instantaneous changes often hypothesized for other currencies. When a currency appreciates slowly over time, those who maintain a long, short-term holding strategies stand to benefit substantially once the global exchange markets stabilize and official windows for trade become more accessible. Many dedicated viewers have directly contacted us, posing the compelling question of whether the Vietnamese Dong might follow a speculative rate adjustment path similar to the widespread anticipation surrounding the Iraqi Dinar. While no official confirmation or definitive blueprint has ever been issued by the Vietnamese government or central banking authorities, the observable evidence points toward a significant tightening of operational control over Dong trade at the bank level. This includes the implementation of more stringent limitations on the bulk acquisition of the currency and heightened due diligence when prospective buyers attempt to place large, volume purchase orders. This kind of calculated regulatory constriction is typically employed when central regulators seek to carefully manage and restrain capital movement in advance of any forthcoming financial policy adjustments. For anyone currently holding the Dong, this is a moment that demands heightened alertness and continuous, informed scrutiny of regional and international economic performance indicators that underpin Vietnam's growth. Throughout the banking networks of the United States, currency holders of both the Iraqi Dinar and the Vietnamese Dong continue to report a consistent series of unusual, albeit localized, events that suggest an underlying state of internal preparation at specific financial institutions. Examples are widespread. In several states, foreign currency desks have been temporarily shut down without any public explanation. Other banks have quietly introduced new, complex identification requirements, even for small exchange transactions that previously required no verification. And in numerous regions, individuals have been definitively informed that certain foreign currencies are currently unavailable for sale, despite those same banks having sold them routinely in the recent past. These collective patterns, while insufficient to confirm a broad global revaluation event, strongly confirm that palpable activity and operational changes are occurring on an internal institutional level. It is an established principle in finance that whenever banks unilaterally alter their internal policies without a corresponding public regulatory announcement, the shift is almost invariably linked to a directive for internal systems updates, critical compliance changes, or mandated regulatory instructions issued by higher oversight authorities. For individuals holding these specific foreign currencies, these emerging signals serve as powerful reminders that significant, market-altering changes can, and often do, occur quietly, without any preceding public fanfare or warning. The ability to be thoroughly prepared ahead of time is therefore an essential advantage. Regardless of whether these developing changes ultimately lead to a spectacular market event or a more measured, staged rollout of new financial structures, the state of your personal readiness remains the singular, controllable advantage that you possess throughout this period of transition. When discussing the concept of preparedness in this context, the primary question from our viewership inevitably becomes, what concrete steps should I take if a major currency exchange opportunity were to suddenly open up? While no public blueprint for a global exchange has ever been officially released, the long-standing, prudent logic of experienced investors dictates the necessity of maintaining impeccable documentation. Having up-to-date and easily accessible identification, such as a current passport, government, issued driver's license, or national ID card, is crucial to avoid last-minute scrambling. Furthermore, the ability to irrefutably prove the origin and legitimacy of your purchase through original receipts or confirmed transaction records lends significant credibility and facilitates a smoother verification process for your holdings. Systematically organizing your currency by denomination is another often overlooked detail that ensures an efficient and professional verification, especially when dealing with substantial quantities of notes. A great number of holders unfortunately neglect these small, but critically important, administrative steps. In a scenario where an exchange window operates on an accelerated timeline, even a minor delay caused by searching for misplaced documents could mean missing a priority appointment or losing advantageous positioning. Beyond the physical currency and documents, developing a clear, simple personal financial strategy is also crucial. Deciding in advance on whether you intend to save the funds, invest them, or allocate them toward long-term goals can preempt rash or emotionally charged decisions later. True preparation is not about succumbing to the expectation of an instant overnight event. It is about responsibly positioning oneself so that you are fully equipped to capture an opportunity promptly and effectively when the broader market conditions finally shift. Let us now analyze the behaviors inherent in a genuine market shift, as understanding these macro-level patterns is key for investors seeking to maintain a strategic advantage over the pace of change. Economic analysts globally are intensely scrutinizing several critical data points related to Iraq: the progression of its national budget planning cycles, adherence to oil output and pricing agreements, the transparency and results of its weekly currency auctions, and the forging of new international and institutional partnerships. Each one of these multifaceted elements directly contributes to Iraq's long-term rate stability and the overall strengthening of its sovereign currency. The Iraqi government's explicit commitment to fiscal digitization, enhancing financial transparency, and deepening global market integration all signal a strategic, deliberate steering toward a more robust and predictable financial environment. In parallel, we must consider the broader global economic pressures that inevitably influence emerging market currencies. The US dollar index, the global price of gold reserves, and persistent inflationary pressures across major economies all act as powerful external variables. When these major global markets undergo periods of significant adjustment, controlled currencies like the dinar and the dong can either gain or lose relative strength, depending entirely on the speed and efficacy of their respective central authorities' responses. What defines the current moment as exceptional is the fact that multiple global financial markets are undergoing simultaneous, rapid adjustments. Both Iraq and Vietnam are demonstrably engaged in this broad, global financial recalibration. This dynamic creates a climate where proactive currency holders are intensely monitoring for any measurable signal that an official rate correction or a major structural monetary update is imminent. A development that has significantly heightened the vigilance of many experienced investors is the measurable, growing number of reports concerning exchange-related contact, pre-appointment messages, specific instructions, or private notifications. While the veracity of these individual claims is impossible for an outside observer to officially verify, the collective volume of such reports has risen to a statistically significant level. Numerous individuals have claimed to have been contacted by former banking associates, professional wealth managers, or people associated with older currency exchange groups, all offering a similar, consistent message of encouragement to stay fully prepared. Regardless of whether these communications truly reflect legitimate internal preparations within financial institutions or are simply the result of an intensifying rumor cycle, the consistency of the message and the simultaneous timing of the reports across different geographic states is certainly noteworthy and warrants analysis. When speculative chatter rises concurrently across diverse regions, experienced investors tend to focus on analyzing the trend, the collective pattern, rather than giving undue weight to any single, isolated testimony. Trend analysis is one of the most reliable, non-predictive tools available in the foreign currency space, and the current trend is unambiguously on the rise. We must emphasize that no individual should ever base crucial financial decisions solely on the unverified account of another person. Yet everyone should pay critical attention to emerging, collective behavioral patterns. The widespread nature of these private conversations serves as a strong indication that those who hold these specific currencies must maintain an elevated state of awareness, exercise extreme caution in all dealings, and remain absolutely organized and prepared, just in case an official time sensitive exchange window were to open sooner than widely anticipated. The reality remains that your next considered financial action truly matters, and the reason for this is timing. If the market has indeed entered a strategic positioning phase, as many indicators suggest, then any personal delay in preparation could carry a considerable financial cost. One of the most common and expensive errors made by inexperienced currency holders is the incorrect assumption that an exchange opportunity, should it arrive, will remain open and accessible indefinitely. If a new rate window or exchange opportunity is activated for a strictly limited duration, those who hesitate or are disorganized often find themselves losing their place in the queue. Another significant risk is waiting until the last possible moment to organize essential documents or confirm the authenticity and integrity of their currency notes. We have heard numerous cases where holders have even forgotten where they meticulously stored their currency or have misplaced crucial purchase receipts entirely. Maintaining a state of readiness is fundamentally about proactivity, not panic. Financial opportunities inherently favor the organized and the well-informed. The individuals who approach this moment with disciplined seriousness, acting based on rational and responsible preparation rather than emotional impulse, are the ones who are strategically positioned to reap the potential benefits. The operational landscape of the Iraqi Dinar market today bears little resemblance to what it was even last year, and the Vietnamese Dong is steadily accumulating greater prominence in the ongoing global economic discourse. In an evolving, shifting global financial landscape, the foundational decisions you make today to organize, to document, and to plan will ultimately shape your financial outcomes tomorrow when the structural changes finally manifest. Let us now consider the critical topic of global liquidity patterns, which are often the unseen engine of major currency movements. Financial experts have been observing and tracking large-scale movements of institutional capital across several major world markets. When institutional liquidity shows a pattern of consistent increase in certain select regions while simultaneously decreasing in others, this is often a powerful, silent hint of coming financial adjustments or repricings. Specifically, several major global investment funds have been consistently reallocating significant portions of their assets, moving them away from historically volatile or unstable markets and channeling them into emerging economies, particularly those intrinsically tied to the energy sector, global manufacturing, and other rapidly developing economic spheres. Iraq squarely fits this emerging market profile, underpinned by its expanding oil and gas sector, significant ongoing infrastructure development projects, and its renewed, formalized partnerships with major international financial bodies. Vietnam, too, is a clear recipient of this attention, fueled by its ongoing manufacturing boom, demonstrable export strength, and rapid pace of digital and financial adoption. When substantial institutional capital begins to shift its positions, everyday individual investors must pay exceptionally close attention because these institutions typically move based on sophisticated expectations of future performance rather than simply reacting to present-day market conditions. If major institutional funds are anticipating stronger, stable currency performance or major regulatory shifts, their early, seemingly quiet movement is often the first discernible indicator that a new, powerful financial cycle is silently forming beneath the surface of the established economy. Another noteworthy and highly debated key development is the burgeoning conversation around advanced digital verification systems within financial institutions. Some investors have suggested that new biometric or advanced digital identification processes are being discreetly tested at various banking facilities, although, crucially, no official public-facing release or confirmation has been issued. What we can state with absolute certainty, however, is that the global financial system is engaged in an undeniable movement toward creating more secure and transparent transaction environments as a core component of global modernization efforts. Whether this involves utilizing sophisticated advanced currency scanners, implementing updated digital authentication tools, or adopting strictly secure, appointment-based protocols, financial institutions worldwide are transitioning to more controlled and rigorously secure environments for all high-value exchanges. Should Iraq or Vietnam proceed to significantly enhance and modernize their respective currency handling and verification processes? Likely step toward greater international integration. These advanced digital systems could eventually play a profound and structural role. For the currency holders, the enduring message remains unequivocally clear. In any future dealings at a financial facility, you should anticipate and mentally prepare for modernized, often complex, and secure verification steps. Mentally preparing for a more structured, formal, and perhaps time-consuming process will help significantly reduce stress and potential error should major operational updates be suddenly rolled out. This emerging financial era will demand heightened clarity, considerable patience, and quiet confidence from all participants. A frequent and pressing question from our viewership is whether truly significant currency events could realistically occur without immediate front-page reporting from mainstream news sources. The simple, factual answer is a resounding yes. Significant shifts in financial policy and monetary movements often commence quietly, particularly when they involve controlled or emerging market currencies. Governments and central financial institutions typically choose to release public, comprehensive statements only after all internal processes, compliance checks, and operational alignments are fully and meticulously finalized. This means that certain substantive updates may very well be felt, implemented, and experienced at the operational banking level for a period of time before they are fully vetted and appear in national or international headlines. This operational reality is not necessarily an indication of secrecy, but rather a reflection of the cautious, procedural way in which financial systems globally operate, prioritizing verification, prudence, and step-by-step implementation. For instance, if the Central Bank of Iraq decides to introduce incremental adjustments to its monetary policy framework, those initial changes will gradually influence measurable market behavior and institutional conduct well before any official, formal announcements are publicly issued. The same principle holds true for those vigilantly observing the Vietnamese Dong. Nothing structural happens instantaneously, but everything that is moving leaves identifiable traces. These critical traces, the subtle policy adjustments, the collective changes in bank behavior, the visible digital modernization efforts, and the traceable shifts in global liquidity, are precisely what astute investors are monitoring with intense scrutiny right now. Let us now delve deeper into the fundamental reason why your next action is so profoundly important in a dynamically shifting market environment. If the current trajectory of evolving financial conditions continues at its present pace, the individuals who dedicate themselves to studying the emerging patterns and who react thoughtfully and strategically rather than impulsively will be the ones who stand to benefit most significantly. This moment is not about recklessly chasing unsubstantiated rumors or rushing into unverified opportunities blindly. It is fundamentally about recognizing the significance of the timing, developing a deep understanding of what genuine preparation actually entails, and actively avoiding the predictable mistakes that others make when they either succumb to panic or dismiss clear, collective warnings. Consider, for example, the error made by some holders who have impulsively attempted to cash in their foreign currencies at a regular retail bank, only to face questions, delays, or even confiscation because the clerks were completely unfamiliar with the notes and the proper protocol. These regrettable situations happen when people act impulsively and emotionally instead of adhering to a well-researched, strategic approach. The prudent and effective approach is to maintain quiet patience, meticulous organization, and a consistently informed perspective. Currency transitions, whether they unfold rapidly or over an extended period, ultimately reward those who demonstrate exceptional financial discipline. Your disciplined mindset and proactive state of readiness today are the determinative factors for your financial outcome when the market conditions finally shift into their next, decisive phase. We must now revisit how the concept of genuine economic stability acts as the most potent influence on any currency's behavior. The Iraqi economy has been undergoing a series of fundamental structural changes, all specifically aimed at long-term stabilization, institutional hardening, and deeper international integration. These concerted efforts encompass the implementation of new, stringent budgetary measures, the securing of reliable, long-term oil contracts, and the adoption of updated digital compliance protocols to meet international standards. Simultaneously, Vietnam continues to solidify its international recognition for its pivotal role in Asian manufacturing and its astonishing pace of technology-driven growth. When sovereign nations successfully strengthen their economic foundations and governance, their currencies often experience a gradual, foundational improvement in perceived value and stability, even if a final, official rate change requires more time to manifest. Financial markets operate on confidence, stability, and the strength of international partnerships. For those dedicated holders observing these parallel developments, the core, practical question becomes, how long will it take for these observable, underlying improvements to finally translate into tangible, meaningful currency movement? While no one can honestly offer an exact prediction of timing, meticulously watching the specific, deliberate steps being taken now by both nations helps to form a realistic and responsible expectation for the future. Both Iraq and Vietnam appear to be firmly aligning themselves with the overarching global modernization movements, which is precisely why so many long-term investors across various states continue to maintain both currencies as a key part of their carefully considered, long-term speculative strategy. Persistent reports of foreign currency restrictions at banks continue to circulate among investor communities. While these internal restrictions are certainly not a guarantee of any major, imminent event, they unequivocally serve to heighten necessary vigilance. Some institutions have temporarily halted all foreign currency sales. Others have implemented completely new, stringent verification rules. And several have quietly adjusted their internal compliance guidelines purely for enhanced regulatory adherence, without offering any further public explanation. Historically, banks adjust their operational procedures precisely when central regulators update their risk classifications, revise audit requirements, or introduce new, complex anti-fraud guidelines. These internal shifts may therefore be early, localized indicators of a broader transition toward more controlled and highly structured foreign exchange environments. Currency holders should concentrate their attention not on the rumor that surrounds the change, but on the discernible pattern of the change itself. When multiple geographically dispersed financial institutions make similar, coordinated moves, it suggests a centralized policy adjustment is likely underway. Staying actively aware of these operational developments is crucial to remaining fully prepared for whatever comes next. Whether that is a clear market opportunity, an official policy clarification, or simply the permanent establishment of a more structured, formal exchange environment. The ability to distinguish between noise and pattern is the mark of a disciplined currency watcher. We must now dedicate a section to the critical topic of risk management, an area that far too many investors carelessly overlook during periods of high expectation. Should a potential exchange window open, holders face a significant risk of making financially irreversible mistakes by either acting with excessive haste or placing their trust in unverified, speculative information. Scammers and fraudulent actors often surface and multiply during periods of market excitement, offering fabricated appointments, sending deceptive emails, and making completely unrealistic promises of instant wealth. Protecting your assets requires calm, rational judgment, an immediate skepticism toward all unsolicited or unknown contacts, and an unwavering commitment to safe, official practices. Never, under any circumstance, should you share sensitive personal information with an unverified source. Never send money in advance to secure an unverified appointment. And never allow anyone to convince you that urgency is a legitimate reason to abandon cautious, well-established financial procedures. Real and verifiable financial opportunities never require dangerous shortcuts or the violation of common-sense security protocols. Remaining grounded, rational, and exceptionally organized is the strongest and most effective form of personal protection available to any holder. As the expectation and excitement around these currencies continues to build, the prevalence of scams will also inevitably increase, meaning your heightened personal awareness and security consciousness will become your single most important shield against financial harm. Stay vigilant, stay skeptical, and stay on the official path. Many long-term viewers often ask how long they should realistically continue to hold their currencies if a major, definitive public announcement fails to occur in the near future. The honest answer must be rooted in individual financial goals and circumstances. Some people treat the dinar and the dong as true long-term speculative assets, comfortable with the ambiguity of the timeline. Others view them as a calculated, non-essential component of a wider, diversified investment strategy. Still others hold small, nominal amounts purely as a potential bonus if the market conditions shift dramatically in their favor. The most important factor is that every decision you make regarding your holdings must be based on your personal financial reality and long-term strategy, rather than external pressure, unverified hype, or fleeting emotion. If you make the personal choice to hold these currencies for the long haul, you must maintain a disciplined process of continuous market monitoring, staying fully informed through verifiable sources, and ensuring that your documentation remains meticulously organized and current. Conversely, if you choose to responsibly reduce your holdings, this must be executed through proper verification processes and official, recognized banking channels. The key to successful navigation is making every choice from a position of clarity and disciplined self-control, never from a place of emotional reactivity. Your sustained focus on informed decision-making is paramount to mitigating risks. Finally, let us consider the macro-level global trends that are profoundly influencing the financial environment of these emerging markets. International currencies are increasingly shaped by the tectonic shifts of digital transformation, the ongoing discourse around gold, backed assets and reserve currencies, and sweeping global banking and compliance reforms. Sovereign countries worldwide are moving toward adopting blockchain-based verification technologies, undertaking massive upgrades to their core banking software systems, and adjusting compliance frameworks to preemptively prevent fraud and illicit financing. These massive global changes create an encompassing environment of transition where smaller nations, including both Iraq and Vietnam, are essentially compelled to adapt and modernize rapidly in order to remain competitive and integrated on the world stage. As this wave of global modernization spreads, the stability and international confidence in emerging market currencies will often improve over time. Investors who keenly monitor these global trends understand a fundamental truth. Major global economic resets or financial repricings do not happen in an instant flash. They occur in structured, deliberate phases. Each of these phases leaves undeniable signs, changing regulations, measurable liquidity movements, updated verification protocols, and noticeable banking behavior patterns. Critically, right now, many of these telltale signs are appearing simultaneously across multiple regions and sectors, making this a truly critical moment for anyone who holds an interest in emerging market currencies. One of the most essential aspects for any currency holder to master is the concept of emotional discipline. The common human tendency is to panic when markets appear slow or stagnant, and then to rush in blindly when excitement suddenly builds. Successful, disciplined investors operate in the opposite manner. They meticulously prepare in a period of quiet. They analyze information consistently and dispassionately, and they make every effort to avoid making decisions driven by high emotion. If a verifiable exchange opportunity opens quickly and unexpectedly, emotional reactions are what lead to costly mistakes, such as forgetting crucial documents, rushing into unverified appointments, or fundamentally mismanaging funds immediately after the exchange. The single most effective strategy is a state of calm, organized, and informed readiness. Being emotionally prepared is just as vital as being financially prepared. This brings our extended discussion back to the central unifying theme: your next move matters. In the context of the Iraqi Dinar market shift and the Vietnamese Dong exchange rate breakdown, the market's internal mechanics are undeniably shifting. The collective behaviors of global banks are changing. The foundational systems of the global financial world are undergoing significant transformation. Both Iraq and Vietnam are engaged in strategic movements that strongly suggest a commitment to long-term economic strengthening and stability. Whether a major public change arrives tomorrow, in the coming months, or next year, your sustained, deliberate preparation today is the definitive factor in whether you will be positioned to benefit when that pivotal moment finally arrives. Holding the physical currency is merely the first step. Maintaining a high state of organized, informed readiness is the essential second. Today's environment calls for a combination of heightened awareness, exceptional organization, and wise, patient decision-making. As we conclude this report, remember this immutable rule of finance. Significant financial transitions very rarely announce themselves with a public calendar date. They reveal themselves through emerging patterns, collective behavioral changes, and quiet internal adjustments, all long before any official statement is issued. Right now, those internal patterns are speaking louder than ever before. If you have held onto these currencies for this long, now is the time to stay informed, stay prepared, and stay strategically smart. The dinar market is evolving, the dong market is strengthening, and your next considered move matters more today than at any point in recent financial history.